Hey everyone, how's it, Kevin from chilly Scotland? It's a heat wave here in Cape Town. It's actually quite warm. How you doing, man? Good to see you guys again. We're live again. Let me take the risk disclaimer down. You guys should know that by now. Let's get to this trading and let's get going, man. Right, so where shall we start? Let's put this on a single chart and let's choose the New Zealand. We'll start with that. We can always change it just now. There we go. Right, hopefully you can all hear me and everything's good and we're all on the go. Let's get started with another lovely day. It's Thursday, the 23rd of January already. What a month it's been. It's been so quick and so fast. How did we get here so quickly? And Trump's been inaugurated and the American country's doing great and everybody's happy and the S&P, or shall we call it the US 500, has gone to the moon and back. It's on its way up. Ooh, there's a nice area here if it comes back and takes that money. Crypto's gone mad. I tell you, what a great month. What an interesting month. Chilly Scotland. Yeah, we're having lovely weather here. It's so hot. I prefer the cooler weather sometimes. Weather warnings everywhere. But isn't that normal for Scotland? You get 1 day of summer and a million days of winter, something like that. Yeah, that's actually. I gotta say here, I actually prefer it when we have an average temperature of like 24, 25 throughout the whole year in Cape Town. It's not like the north of the country where it gets so hot, like 40, 50 degrees and stuff. But here we have a nice even temperature usually. But at the moment, we're having the hottest time of the year. Normally February is our hot time, February, March. And we're heading into February, so end of January, and we're having a bit of a heat wave. But a heat wave for Cape Town is something in the 30s. Whereas a heat wave for Joburg and Pretoria and that is like in the 40s. So slight difference there. But yeah, 33 to 35 can be quite hot. 36, it can be quite a nasty with a bit of humidity on the side as well. Good evening from Oz, all the way from Oz. Welcome, welcome. So Tuesday's trades, the US dollar, Japanese yen is doing quite well. That one's in profit, doing okay. That is, there you go, US dollar, Japanese yen. We took it because it did the breakout. It broke through the trend resistance and it started heading towards the upside. We've got a target way up here. We've got a stop loss way down here. I haven't moved the stop loss yet. I'm waiting for it to hit this sort of major area here. Then I'll see what to do with that. New Zealand dollar, US dollar, we took, hopefully Wendy's here today. Hopefully she turns up. Yeah, she asked about taking this trade. So we looked at it and decided, yep, we'll take this trade. It's a good trade. Wonderful, here we are. So we've got the New Zealand dollar, US dollar. This morning we were looking at the Euro US dollar for a long trade. It's rather working out more short than long, probably because there's a major resistance area at the top here. But we haven't taken the trade because it didn't really play out. So, good day from Sydney. There we go. Good morning, everyone. Wendy. Good morning, Rob and Kevin. Today is when I'm on the road at this time. We'll listen in mostly. Okay, Wendy, that's fantastic. I noticed on Thursdays you're normally on the road. Hopefully you've got a nice, big, fancy car that's nice and safe. And you need one of those Google cars that drive you around. That's actually marvelous. I think that's the future of cars. Perhaps in the future, I don't think you'll buy a car. You'll probably buy a little card, and then you'll walk around the corner and grab a car, get in, and it'll drive you where you want to go. It's a bit better than an Uber. There's no driver, and they'll be maintained probably by some company like Elon Musk's company or Google or something like that. So yeah, good to have you here, Wendy, and it's fantastic. So we took your trade and. That's kind of sitting even at the moment, down what, $17 or something like that. So we're doing great. You guys have got any other trades that you're looking at that you're thinking we should take as the A team here today? That's what we're here for. We're looking for trades to take. We'll take them together. We'll have a bit of fun. It'll be great. Shall we have a look at the news, guys? Shall we have a look and see what's on the news? I have to do a little bit of a workaround to look at the news, but that's okay. I'll kind of sort that out as we go. Let me just see here. wrong one. Got to take this one. And then I just got to change it from that to, let me just, there it is. So we can go and have a look at the news. There's the news. Okay, let me go and see the news. Let me go and see what's on the news here. Where's the news? Right, okay. Okay, so it takes a bit of getting used to, you know, all these different little tricks and things that I have to use to do live shows. Okay, so Trump in laser focus on tariffs for Canada. Intel races to find CEO before it sinks to irrelevance. UK to investigate Apple and Google's mobile ecosystems. So not much going on. Micro poised to benefit from Stargate. So if you guys are investing in anything, then, you know, this is where you want to look for your investments and that sort of stuff. It looks like Nvidia has done very well, so I'm happy about that. Coke, I'm still sitting the problem there. There's a lot of other ones that I've got, so many. Okay, right. And then don't forget, we're trading on the funded trader markets. So if you want one of these accounts, I've left a link in the description for everyone. They're really on special at the moment. Where they were $100 last week, they're now $89 this week. So that's great for a 25K. You can buy a 200K, you can buy 100K. Great stuff. We trade with these guys because they don't give us any hassle when we're trading. And 100% profit split, demand payouts. It's all good. It's all good. So if you're looking for one of these, that's in the description as well. Okay, so trade of the day today. That was the trade of the day today. That's what we put out. These are just trades that we're looking at. We're not always trading every single trade on this list. Just by the way, just keep that in mind. Okay, that was the SA40 coming back down again. All right, so let's go back to the charts and let's go and see what we've got on the go there. And I'll have to work that back around again like I did last time. So let's just, let's just figure that out. Takes me a second to do that, but there you go. I'm getting quite good at this, you see. There we go. We're back on. Right. Okay, Eugene, how's it? Okay. Every different platform takes time to get used to. Totally. Thoughts on Aussie dollar, Canadian dollar, and Aussie dollar, US dollar long as well. I know Aussie dollar, US dollar is long as well, but here's the thing, Wendy. We've got New Zealand dollar, US dollar, and I don't like to take two trades that are extremely similar, because if they both go wrong, you're kind of doubling up your risk on any given trade, because New Zealand dollar and US dollar, Australian dollar, US dollar, pretty much close to each other, pretty much the same trade. So Aussie dollar, US dollar is doing the same as New Zealand dollar, US dollar. So we'll just stay with the one trade there. Let's not overtrade. Let's not take two trades that are basically the same. It's a bit like trading Euro, US dollar, and Great British Pound, US dollar. You kind of almost end up with the same trade. I know the Great British Pound is different from the Euro, and I know that the New Zealand dollar is different to the Aussie dollar, but they are based on against the US dollar. And basically your New Zealand dollar, Australian dollar, same sort of area, Euro and Great British Pound, same sort of area. So you're basically taking two trades that are very much the same. So I'm not going to do that, Wendy. That we're going to do without. Aussie dollar CAD we can look at because that's in a different area. But I like the US dollar CAD, but it has been very volatile. I did say we should go long on that, and I don't know why I didn't, but I didn't go long on that. But yeah, there is a long trade there. Then let's just have a look if we've got Australian dollar CAD on the system. I'll just AUD CAD. Oh, there we go. We'll just add it to our favorites. We'll add it to the Rob watch list, and we'll have a look at it as well while we're here. Okay, back to the watch lists, shall we? Yeah, okay, I've got to cross that out, obviously. Okay, there we go. Right. Australian dollar CAD. That looks pretty bullish. What are we on here? We're on the H4. Let me just do some research on it quickly. Oh yeah, this is very bullish. Look at that, why don't you? I don't know if we've missed it though. Let's just see. Let's see what we've got here. Oh, we could wait there. Yeah, that's a a pretty bullish run. Let's just have a look here. I'll draw this in. Yeah. Okay, there's the first problem we've got to overcome. See this resistance here? Okay, there is a nice trend resistance at the top here, which it's heading towards. If it breaks through that, we're going to go long. But it is hitting a resistance here. Could push it down short, Eugene. So just let's be careful. Okay, I've got to take it back down to the H4 as well so we get a better picture. But yeah, if I look at this, very bullish. Definitely looks like it's going to be a long trade. But you have to be careful of this resistance. It is there. And there is a trend resistance as well. I'd like it to break through before we go long. Or break to the downside with a big long red candle telling you we've changed our mind, we're going short now, and then, yeah, we'll go short. So let's just keep an eye on that. Fantastic. I've added it to the favorites. Okay, so Australian dollar, Canadian dollar, definitely worth a look. Definitely worth a look. We can keep an eye on that. Good stuff. Good stuff. That's a goodie. We can't take it just yet. I think we need to wait. I don't know how the rest of you feel, but I think we need to wait. I think we need to wait for it to break through resistance and just give us that signal that we're on our way. Having coffee, by the way. Look at the crypto, guys. Look at that. So volatile. Basically coming back down again. Incredible. Look, I've never been a big fan of crypto because I've always believed that crypto is effectively fresh air. It's got no asset value. But it's an instrument you can trade, and it's a bit of fun to trade it. I would never invest in it. I keep my investments to shares and companies and things that have got asset value. For me, Bitcoin is a bit like investing in a Ponzi scheme or something like that, or a pyramid scheme, or whatever the case. Last one in is the one who loses out. So first one in makes all the money. You know, one of those schemes. It always just feels that way to me. It's got that feeling. But anyway, besides the point, it's a tradable instrument, and it's very tradable. But the volatility was huge in these last couple of days with the inaugurations and all that and everything going on in the world. So obviously it seems happy with that. But yeah, it's back where it was at that 101,000. That's such a magnet, that area. That area is like a deadly magnet. Look at that. Out, in, down, back. It just keeps on hitting this 100,000. Well, 102, 101, 100. Doesn't want to get away from that. It's going to be interesting to see what it's going to do in the long run. Is it going to break heavily to the upside, or are we going to have a Bitcoin crash down to the 70s and you can get a nice trade back to the upside again? But very interesting, that. Very interesting. Back to the Aussie dollar CAD. Okay, I think you all agree with me on that one. Hopefully, if you don't, just tell me you don't agree with me. We should go long or whatever, but just let me know because we got to take trades. Kevin, you want to look at the Germany for a short? Okay, Germany 30, Germany 40, DAX, whatever, same thing. Of course, we will look for a short, but what I am actually seeing here at the moment is a really big lamp pole formation. Now, Kevin, I don't know if you've heard me talk about lamp pole formations in the past, but a lamp pole formation means it's gone straight up, and what lamp poles tend to do is fall over. They got this fall over effect, but you don't want to preempt anything as well. Obviously, you're looking at, you know, your best trade. So on the day chart, that's a huge lamp pole formation. So you can't even get a decent trend out of that. You can get a trend out of the bottom bit here. Perhaps, yeah, you can get a trend out of the bottom bit here. Let's just see what we've got here. You can get a nice trend in there. I hate this pink color, and I don't know how to set it for permanent. I'll have a look at it. Anyway, all right. And then you've got this, obviously, kind of a support area here, which kind of coincides with the trend support as well. So what I would say is, yeah, alts, yeah, Put it back on candles. Okay, there we go. Back on candles, and we can see we're going to have to wait and just get a clear indication for a short on this. I don't think you're going to get an easy short, but we'll see. If we get some movement and some structure, we can start getting some short-term trends into it as well. Just put it back on the H4. Look at the H4. Look how that thing's climbing. Just climbing, climbing, climbing. It's, you know, I'd actually rather wait for a long trade on this. I'd rather wait for it to come down, grab the money and go up on the long trades. Probably be better off waiting for the long trades on the DAX, Kevin, than trying to counter trade this one. I think counter trading this one could be a bit tricky at the moment unless we see the markets kind of tumbling over and falling apart, which would be interesting. Hi Luigi, welcome. Good to see you again. Yeah, Kevin, let's just keep an eye on it for now. Jason, could someone please see the shirt I released and see if it's nice or not? Interesting. Okay. All right. I don't know. Okay. Right. So, as I always tell you guys, market's 50-50. We know the market's 50-50. So today we're going to talk a little bit about the usual strategy and risk. Managing the risk. Hello, Lincoln. Welcome. You know, I noticed one or two comments from outside basically noting once again information which relates to the objectiveness or the system, okay? Telling me that it's the system is this and the system is that, and if you trade this, it's always going to do that, or whatever the case. So that means a lot of people are not getting that it's not the system that makes you money, it's not the lines that make you money, it's the strategy that makes you money. Or maybe just those people didn't watch the video to the end, I don't know. But I try to reiterate that this is not where the money's made. This is where you get the high probability trade. Somebody commented about the high probability trade as well, as in it's only high probability until it's not high probability. Yeah, that is true. Of course. That's why it's 50-50. Okay, it's a 50-50 game. Come on, let's be honest, guys. So what I'm trying to say here is obviously the person is looking at the chart, looking at the lines, looking at the system and the probabilities again, and trying to figure out how that's going to make you a profit, and it's not. So guys, by the way, while you're here, let me know what system you guys were trading, or what strategy you guys were trading, or what indicators you guys were using before you got to this, before you ended up at price action. Because very, very few traders actually start trading with price action. And I mean, in all honesty, I started trading, I was actually very fortunate because I started trading before computers. So the only thing we had was trend lines. So I started trading effectively with this trend line. That was it. That's all we had was the trend lines. And the way we traded it was actually quite interesting. It was kind of like we had it on an average, like a 20-day moving average as a trend line through the chart. And if it was crossing over that, then you would buy. And if it was crossing back through it, you would sell. It was so simple, really, at the end of the day. I would draw the straight line through, and if it crossed back up through it, that would be a buy, and if it crossed back down through it, that would be a sell. That's how we traded, and we only really traded with shares back then. So fortunately for me, I was very fortunate to kind of just land on this. You know, it was, we started trading with trend lines, and we started trading with support and resistance and that sort of thing. There was nothing else. There wasn't all these fancy indicators and moving averages. But these days I find most traders get into the market on a very fancy system, because they go on a very fancy, expensive course. I don't know how much you guys are paying for courses, but the guys are charging an absolute fortune to teach you a system rather than a strategy. And you can easily figure this out for yourself. Look, no problem. I also was silly enough to buy a course when I was younger. When I started out, we didn't have computers, but I was still able to buy a file this thick and have to go through the course and draw pencil lines and, phone the broker for a demo account and all the rest of it. It was quite strange, but we had dial-up phones those days. Giving my age away. But yeah, that's what we did. So I admit, I paid for a course way back then. Don't ask me how much I paid for it because I can't even remember. But I do know that it was pretty expensive, and I know they're quite expensive now. But that isn't really what teaches you to be a trader. What it teaches you is how to take a high probability trade. All of the courses, that's what they teach you, how to take a high probability trade. Yes, it got me into trading. Yes, it got me to understand the markets. Yes, it got me on the right direction. But learning the strategy and learning how the markets kind of operate in the background, that you learn yourself, that you pick up over time. And that's what I'm trying to portray over to you guys as we speak, the strategy behind it, rather than just the lines. I mean, you can trade with any system you want. You don't have to use this system. You can use absolutely any high probability system that you want to. But it's more about the simple strategy and business plan that I put forward every single time. So we're going to talk about that again. Okay. Do you recommend the Nebula trading software for beginners? Forex trading software for beginners? Stefan, you can use any software. The software isn't going to make you money. The software is just basically this. It's a chart, and you're going to trade that chart, and that's all it's going to do for you. You can use absolutely any software you want. And then Ibiza is in the house. What is this program, Rob? Links. Okay, so this is from Funded Trader Markets. Funded Trader Markets is the funded account I opened for us as a team, the A team here, to take trades and see how we go. So we can take trades together. If you have any ideas, we look at them. And if the trade is good, we take the trade. These trades are you guys' trades. They're not my trades. They're your trades that you took. And we are down a couple of bucks, but we'll get it back. That's not a problem. It's actually not that bad. It's only $300 or something. But this is the program that Funded Trader Markets will offer you. There is a link down there if you want to get Funded Trader Markets. By the way, they're very cheap. But here's the thing. This one is C-Trader, and it's actually, I'd never used it before, and I took it and we're using it, and it's great. The other one is called Match Trader that they offer you, and that you can get Trading View on. They offer you Trading View on that as well. On my cash accounts, I use MetaTrader 5, but I never show my cash accounts online because it's just, for me, it's like putting your bank account out there. I just don't do that. Okay, so apologies for that, guys, but that's my fears and things I have to live with. So you guys don't have to worry about that. I'm always pretty paranoid and suspicious about things like that because there's just so many scammers out there and so many people out there trying to steal your bank account details or your money or passwords, whatever the case, and it just drives me insane. Okay, so if the video was about grass being green, I'm sure somebody would have a contrary opinion somehow. Well, that is what I've always been saying, is the contrary opinion is always going to be that way. I know you're talking about the comments I was talking about now, and I actually just want to bring it up because I'm just trying. When I read a comment like that, it means to me the person didn't understand. So it means they didn't figure that this is a chart, and the chart's not what makes you the money. And then I try and tell the guys to go to the strategy and listen to the strategy because that's what it's about. But yeah, now the point is contrary. You could put two traders in the same room and you're going to achieve a different result on the same system. Okay, so Kevin's only course was here, right? How much emphasis do you put on fundamental analysis besides the technical analysis? Luigi, much, yeah. Hi, Rob. I've taken £460 this week so far from gold. Well done, bud. You know what? I was an idiot with gold with those. You know, the other day when I got out of the trade, I should have stayed in the trade. It played out to the T. We would have easily made the $300 or $400 we were targeting. But anyway, that's okay. You know, that's how trading goes. You know, it's not gonna change anything at the end of the day. But we got out of the trade far too early with a 60 or whatever dollar profit. Crazy. But that's trading, and that's why I say stay in the trade, don't get out of the trade. I just wasn't feeling it on that day, and that's why I don't like looking at the charts. How much emphasis do I put on fundamental analysis besides the technical analysis? Now, I've gone over this in depth before. Yeah, and if fundamental analysis is important for analysis, and any good sites to recommend. Okay, so here's the thing. Okay. Stuttering today, waiting on Trump's policies. Yeah, always. There's the thing with fundamentals. I grew up hanging my hat on the news and fundamentals. I mean, every week I would wait for the jobs figures. I would wait for the CPI, and I'd be in there and trading when the news comes out and the market says this and the market says that. And, you know, knowing which way, if the jobs figures were this, then the markets are going to go up. And if the jobs figures are that 1 point below, the market's going to go down. And I traded the news like a madman. And it drove me insane, actually. And then I realized that no matter what I did trading the news, the market would always settle back to where it's supposed to be. Now, what does that mean? You see, the markets are based on traders, not lines, and not quick news items. It's based on people trading money and money flows, the way the money moves within a country. And it kind of like, at the end of the day, is always going to settle where it's supposed to be in relation to the economy of that country, because all of your stock market trades are made up of all the companies, and all of your Forex trades are made up of the value of the currency in the country at the end of the day, against one trading off against the other. So then I realized, okay, because in those days I was basically trading 50-50, basically 50% fundamental, 50% charts. But then I realized I'm putting too much emphasis on the news, too much emphasis on the small news. In other words, these things on the right-hand side here, initial jobless claims, continuing jobless claims, all these little things, President Trump's speech, Kansas Fed, manufacturing, all these things, okay, there's so many in a day. And I realized that this is making you insane. This is just like up and down, up and down, up and down. And you need to, that's noise. You need to take that noise and push it away. But you still need fundamentals. So what I do with fundamentals these days is effectively use them mostly for investing. So if I want to invest in companies and things like that, then I get a little bit of information on the company. And therefore, also, I look at maybe geopolitics, or if something big is going down. For example, an election in America, who won the election, for example, a war breaking out, or a bank going bankrupt, a Ponzi scheme crashing. You know, these are things that you need to know. Cryptocurrency going bankrupt. These are things that are important in fundamental analysis. These are things that are important to know. So what I normally do, Luigi, random coding sites better to, no, it's not better to do news trading at all. That's what I'm trying to say. Don't trade the news. The news is just going to drive you. It's just noise. You got to take the noise out. The only news you're looking for is big news, really big news. Those are the news items that you're looking for. What you're trading when you're trading a chart is effectively everything that's happening in those fundamentals, all that the traders are doing, and effectively what you're doing is watching what the crowd is doing and going with that flow. That's what you're doing on the charts without knowing the news. But the bigger news items will affect how you trade. So what I normally do is I'll use the Yahoo, and I'm going to do this whole little thing here again, where I just move this around a bit. Let's put that back where it was. What am I doing? Live capture. I've just got to move this around a little bit. I'll show you here. So basically what I do is I use this Yahoo Finance. Okay, and I'll just go in here and I'll just have a look at what's going on in the news. And if I want to see what's going on in any particular company, I can click on here. Let's say it's NVIDIA. I can click on NVIDIA. And in general, it'll take me to NVIDIA Corporation. And it'll give me all the news on this that I want. There's news, there's charts, there's conversion, there's analysis, there's financials. Everything I want on this company is here. 1 year target, ex-dividend dates, earnings per share, price to earnings ratios. It's all here on this particular share. So if you're investing, it's a fantastic thing. Yahoo Finance, totally free. Why am I advertising it? I don't know. It's totally free. You can just go and you can just find out what you need to know. And then you can adjust that. If this guy says something, it could affect your trade or your investment or whatever the case. But hanging my hat on the news, no, not anymore. That's in the past. Here's those funded trader prices at the moment. Actually quite cheap at the moment. That's not bad at all, got to say. And then also you can get your little calculator.net investment calculator at Google. It's fantastic for working out your investments over 20 or 30 years. Works out quite nicely. So let's put this back on the charts and we can carry on from there. Cool. So I did want to speak to you about the strategy, so we still have to do that as well. Good afternoon, Anthony. Good to see you. Roy, hi Rob, my first time joining. Roy, welcome. And we all welcome you. So in case you don't know, if you've got any trades that you're thinking of, this trading program that we have here is a funded trader markets account. And if anybody wants to talk about a trade, we can talk about it. If we take it, these are your trades, not mine. We take the trades together and we see how this account does as a group. Okay. So yeah, Luigi, that's kind of my way of looking at things. So hopefully that makes sense in one way or another. So for those of you that are new here, you know, trading, I've been trading for 1 million years, and yeah, I'm just doing this so that you guys can figure the game out as well, because we don't make money from squiggly lines. We make money from strategy. So let's go over the strategy. And what is the strategy? And if you guys don't know the strategy by now, we're in big trouble. We're in big trouble because I've been, you know, really trying to get it over for quite a while now. And the strategy is simple. Basically, make more on your wins, lose less on your losses. And how do we do that? Effectively, what we do is, why is there so many lines here? Okay. What we do is we say we're going to take the same amount of loss on every single trade. In other words, risk first before anything else. We're going to do that, Henry. We're going to recap the trades and what we're going to keep over the weekend. At the moment on this account, we've got the US dollar, Japanese yen, buy. We've got New Zealand dollar, US dollar, buy. Okay. Those are the two that I think you guys chose them on Tuesday, right? Okay. Now, and we sold the gold, remember? We let that go. So the strategy is simple. Work out your stop loss first. So on a $25,000 account like this, every trade must have a stop loss of 1%. We work on 1%. You can work on 2, 5, 10, whatever you want to. Preferred is 1% on every single trade. Try not to change the stop loss on every single trade. Try and keep it as close to the same as possible. So what I normally do is work on a principle somewhere between $200 and $250. Okay, that's the stop loss. because sometimes you struggle to work it out with the contract size and that sort of thing, depending on the instrument. So somewhere between $200 and $250 on every single trade. Let's not change it. Keep it the same. But now, how to approach that strategy is the bit that people struggle with, because they'll be like, oh, I'll put a stop loss here. How am I going to get the $200? What you do is the first thing you do is you go and work out where your stop loss is going to be. So for example, on this US dollar Japanese yen trade, we decided that the stop loss is going to be down here at 154.4. Is that correct? 154.492. I suppose it was going to be 154.5, but it came out at 492. So that's where we wanted the stop loss, because it's below the last low, it's below the support, it's below the trend support. So we know that if the trade gets here, it's invalid. There is no way that this is going to be a valid long trade if it gets to this point. So we need to get out of the trade at that point. So that's the stop loss. Now that would be $250 from our cost. Our cost, which is up here at 155.92. Now you work out how many lots, how many pips, how many contracts you can take from there to there. And in this case, it was 0.2 lots. 0.2 lots gives us that stop loss that we require. I think it's 230 or something like that. It's close enough. So now we know that's the size of our trade. But what we need to do is work out what size of profit are we going to make? Where's the target? In this case, the target's up at 158.4, 158.5 up here. It's actually below the highs, and we believe that there's a possibility, in all likelihood, that this could get back up to this area up here. But what we're going to do along the way is we're going to move the stop loss up to break even once this reaches that level on that yellow line here, because that is going to be in a reasonable profit at that point. And it's a key level. If it breaks through that key level, we're going to move the stop loss right up into a profit, actually. And as it goes up, we'll just keep pushing the stop loss up behind it. When it gets to profit, we'll move the stop loss right up to behind it on this yellow line here. And if it comes back and takes it out, we've made target. If it carries on going up, we'll just keep moving the stop loss up behind it. The trick is with strategy. It's not these lines that make you the money. It's how you approach it psychologically, how you approach the market. The difficult part with this trade is sitting on your hands and not selling and taking the trade out. The difficult part is not having fear of missing out. The difficult part is not being able to sit back and let that trade play out. But, you know, you're in a profit here. That's great. And it is coming back, and that's going to happen. But if you look at any trade, look at how the trade comes up. When it goes up, it doesn't go up in a straight line. It goes up, comes down, goes up, comes down, goes up, comes down. But eventually it gets to that target, which is what you're waiting for. So the difficult part of trading is having a little bit of patience, because most traders don't have any patience. Also being able to sit and watch a loss, being able to sit and watch a trade run away without you, being able to sit and watch a trade in profit and not trade out of it. It's actually more difficult than being in a loss, because you're in a loss. You know, it's funny how people, when they're in a loss, they'll quite easily move the stop loss away. They'll quite easily dollar cost average a loss, which you shouldn't be doing. But when it goes into profit, you won't add to a profit, and you'll jump out of the trade as soon as you possibly can. But if a trade goes into loss, you won't jump out of that trade. You'll hold on to that trade for dear life. Interesting, isn't it? So strategy is where your money's made, not on the squiggly lines. What the squiggly lines do for you, what the candles do for you, what the system does for you, what this price action system does for you, is it gives you a high probability trade, which, as in the comments I was told, it's only high probability until it's not high probability, which is true. It's a 50-50 game. So now, suddenly, you're actually, without knowing it, agreeing with me that it's a 50-50 game, but most people don't. By saying that it's only high probability until it's not, means you agree with me that this is a 50-50 game. The reason it's 50-50, is because 100% of the traders in the market want to win. Absolutely everyone who's trading wants to win. And what you don't understand is that everybody's trading against everybody. That's very important to know. And then, Henry, I did mention earlier, I think it was on the members video actually this morning. Yeah, we need to decide whether we're going to keep these trades over the weekend or not, because that's important as well. Do you keep a trade over the weekend? Now, Forex, and with nothing happening, for example, there's not that much going on in the world over the weekend, hopefully. There doesn't seem to be anything teetering on the edge. So we might be able to hold on to these trades because it's Forex, it's not that bad, and we're not long on an index or anything like that. What I don't like holding over a weekend is an index long. I don't mind holding it short because Monday morning you're not going to come back and have some kind of euphoric event that's going to make it go so long it's going to bankrupt you. But you could have a disastrous news event when you come back on Monday, which could crash the markets, which goes back to the news thing again, where I said that I won't trade small news like this, but I will trade or keep in mind the bigger news events or the bigger things that are happening in the world, which means I've kind of reduced my news factoring into about 20-30%, where it used to be 50-50. Because these small news events, there's so many of them during the day, they'll just drive you insane. They won't help you in any way at all. How's the New Zealand dollar, US dollar doing? Not bad. And how's the euro, US dollar doing? Okay, that's okay. And then, yeah, then there's the gold. What's the gold doing? Gold is doing the old I want to come down thing. Okay, let's just have a look at a rectangle here. Let's draw one in. Oh, come on. Don't give me a hard time. Okay, so there's a bit of money lying here. So if it comes down and takes this, then it'll probably go up again. There's a lot of money lying here by the looks of things, because that was quite a big run. So this is at 27.20. So it might just get down to this 27.20 level now, which should be quite interesting, don't you think? But okay, but there's trades in 5 minutes. So 5-minute trading, 5-minute trading. I just love discussing 5-minute trading. I've traded 1 minute, I've traded 5 minutes, I've traded 15 minutes, I've traded day, I've traded week. The one I like trading is 4 hours because I can choose a trade and go and do whatever I want to do and just leave it. And if it takes a day, it takes a week to play out, so be it. That's fine. Patience. 5-minute trades, you don't need patience. But here's the thing with 5-minute trades. And I know we spoke about it on Tuesday, but and I know you trade the higher time frames and you just use that for a sniper entry. But be careful of those sniper entries on the 5 minutes, because the information you're getting down there is not that reliable. So I get it that you're getting into a trade. I would actually take, if I was trading on the hour or 4 hour, I'll rather take my sniper entry from maybe the 30-minute, somewhere around there. Worst case, 15 minutes. But even then, the information is not as reliable. It just gives you a quick sort of look in. So for example, when you see this gold, you're looking at a 5-minute because you're seeing the trade here. You see that those are all the sellers. Those are all, you see that big long tail? That's telling me that gold is a sell on the candle for the next 4 hours. So there's probably an incredible amount of selling on the 5-minute. I don't know if we're going to be able to see much, but there you go. There's that incredible amount of selling. You see how that pops up? All that selling. That is effectively what you're getting on that 4-hour chart, that tail. So this is all one candle that we're looking at on the 4-hour, and it's a long tail. Now, what you have now is a supply of money lying up here at 27.50 on the 5-minute. So what you might wait for on the 5 minute is for this to come all the way back up here and take the money again and then go down. And on the 4 hour, that's perfectly possible. So what you've got here is this heavy down run, which looks quite serious on the 5 minute. But that's why this information is pretty unreliable, because all this information here, it's good information in one sense of the word. All this information here is effectively all stacked up into that tail there. That's where it all is. Now, if you look at that tail, you can see that this is definitely looking like a pretty much inverse hammer. It looks like it's going to push it down on the next candle. But if you look at the 5 minute now, is it going to push it down all the way? There's your support all the way down here at 27.20. So it's probably going to push for that 27.20. Look at the H4. There's that money lying there. So it's going to push for this 27.20. It's going to push for that money, most likely, if you want to take a short. For me, there's no risk to reward because I take my trades on a longer base. So I'll rather wait for it to hit this money and then take the long trade back up, because then I got much more risk to reward. In other words, I can target the 27.80, put my stop loss down here at 27, losing 20 points, making like 60 points. That's the basis of the trade. Whereas at the moment, I can basically make 20 points for a possible loss of 40 points, which is, there's no risk to reward for me to take a trade here. Okay. Gold. Yeah, but you can within the group here if you like. Ranging just now, so there's no clear trend. There's your trades. That's what I'm doing. Yeah, but I know that's exactly what you're doing. I know that. And the reason I know that is because I've done it myself. I know exactly what you're doing. But like I say, just anything to watch out for on that, like I say, is the information that you see there can confuse you. Because it's not reliable information. It's basically that tail. That's reliable in itself, telling you that this is going to go short. But when you look at it on a 5 minute chart, it looks like a massive trade. It looks like something big time. But when you want to take the trade on the higher time frame, there's just no risk to reward here. And this being such a bullish run, I would actually prefer, on my side, I would prefer to wait for a long trade out of the demand of money. And also based on, let me just make this yellow because I hate this blue. If you look at that, there's your trend support. So it's going to come down, hit that trend support. If it breaks that trend support, it's very short. If it bounces up, nice green one, then you've got a nice long trade with a lot of reward for very little risk. So you've got to look at the trades for what they are. Now, what you're doing going short here is you're counter trading before you should actually be counter trading, because it's still in a bullish structure. So you're actually counter trading against the trend. Trading against the trend is not your friend. But if you look at it on a 5 minute chart, it looks like you're going with the trend, and it looks good. But you're only trading for the next 5 minutes. So effectively, what actually happens when you're trading on day trading, for example, on a 5 minute chart, that's what day traders do. They're trading for 10 points or 10 pips or 5 pips or 15 pips. So it's high stakes. So every pip that you lose is big money. Okay, so you want to lose $200 on a stop loss of, say, 5 pips or something like that, if you were day trading. And that can move very quickly on a 5 minute chart. Look how quickly that's moving. You can take 5 pips out in seconds, which is why I recommend, especially for the guys starting out, that you stay on the slower time frames as much as possible. And I would even recommend to the guys starting out, use the day charts. It's fair. Don't get yourself caught up in super fast trading, because it can. You see now here, you can take a trade. Now you start looking at, I'm going to take a long trade here. Now you're looking at sizes like 20 point stop loss with a 60 point profit. That becomes different. That becomes much easier to handle than 5 points and 15 points and those sorts of trades, because it's unreliable and it can take you out in seconds. So just watch out for that and just keep an eye on that, and just be sure that you're on top of that, and then you'll be okay. But like I say, the trouble with 5 minutes, and I always talk about the 5 minutes, guys that are actually trading 5-minute charts, actually day trading, have got to have a really, really strong psychology. You've got to have a super strong psychology. You've got to be able to run those wins, and you've got to be able to take those losses, because those losses can be quite daunting. And you know, like I say, 99% of traders actually lose on 5-minute trading simply because of the psychology behind it, the difficulty of carrying those 5-minute trades, because they're squeezed. They're much smaller trades. That whole 5-minute chart is squeezed into that little candle. That little candle there. That's hectic. It's a lot of movement. It's I presume you mean CFD, because I see you wrote DFD. I could blow my account on a 4-hour. Yeah, absolutely. Look, CFD is very similar to this, like this funded trader account here. A CFD works exactly the same as this. It's like you're trading on a geared trading system. So this is 1 to 100, I think. It's 1 to 100. Okay, so 1 to 100. I mean, really, if you take a couple of contracts, you can blow the contract. You can blow the account very quickly. So that's why I recommend taking the higher time frames. Because, like I said to you now, you trade on the 5-minute time frame, you'll blow this very quickly. How would you know that this kind of move is going to... Look how big this move is. Now, you're trading on 10 to 15 points. I mean, this is a good, what is it, 20 points, 30 points that it's moved here. So, you know, if you're not on it, it can be quite tricky. If you were trading 4-hour, you'd probably be short here. So you would have been fine on the 5 minutes anyway. But like I say, it's much of a muchness. Just watch yourself if you're trading on the lower time frames. Okay. That's why I walked away from the lower time frames, because it's insane. And you have to sit and watch the charts all the time. You constantly got to sit and watch the charts. It's an absolute nightmare. And that's not something I do. I don't sit and just watch charts. That doesn't work for me. That's why I find the time to make these YouTube videos for you guys, because I don't sit and watch charts all day. I got other things that I do, and I enjoy my life. Sitting watching charts all day is not my idea of that much fun. I enjoy it, but not that much. Not that I can just sit glued to a screen all day. I can't do that. I'll check back on it, and I'll check it out, and I'll keep an eye on it. But for me, it's about putting some money in and making some money out of it. That's what it's about. You know, so many guys, it's more about playing with the charts and whatnot. For me, it's not. For me, it's very much I'm taking a trade. It's a high probability trade. Where will it play out? The trade's in. That's it. End of story. We'll see what happens. Okay. But then when you've been doing this a long time, you're not going to be wanting to sit and watch charts all day. I can promise you that. It does get kind of boring, so to speak, and lonely. So, yeah, don't do it. Yeah. But that's it. And that's another thing. I noticed a lot of guys change the colors of their candles from, I don't know, they go black and white or blue or whatever the case, and they got this thing that it's going to help you with your psychology. And I've got an opposing view to that, and my view is that's not going to help you with your psychology, because I actually did try it, and I find it really difficult to see which way the chart's going that way. It's like trading with a line chart. I rather see when it's red and when it's green, because then I know which way it's going without a doubt, without any doubt, without any shadow of a doubt. I know that's red and that's green, and Green means up and red means down, and I trade both ways, so it doesn't matter to me what color it is. It just matters to know which way it's going. So for me, I prefer my charts red and green. So I hope you guys don't mind, and I hope it doesn't freak you out that the charts are red and green, but I prefer it that way because I can, at a glance, see what something's doing. I mean, for me, to go to a 5-minute chart like this and immediately see the two green bars up like that tells me everything. Everything I need to know. What's happening on that bar, you see? So don't be afraid, guys, to use the red and green bars. I know people have told you not to, but yeah, don't do that. So, guys, what I've brought out for you on for what I'm bringing out for you for tomorrow is an interesting video, and it's going to be the difference between stock investing or investing in the stock market against investing in property or leaving your money in the bank. It's going to be an interesting one for you because I've dealt in all of them. I've dealt in property, I've dealt in investing in the stock market, and I've left money in the bank before. And I can tell you now that the stock market's the way to go. But go and watch the video and go and see for yourself. That'll be for tomorrow. That we'll talk about tomorrow. Something different for you guys to think about. Because for me, investing is the one thing that's going to do you good in the long run. Now, I know a lot of you guys are middle-aged and older and whatnot. Maybe not as old as me, but yeah, catching up. So maybe you don't have 30 years to play around and wait for the money and stuff like that. So, but you might have 20 years to play around and wait for the money before you retire. I don't mean peg it, I mean retire. But if there's any really young people out there, much younger people, really, guys, you've got to start now. You've got to start early and just start putting money into that market. Start putting money into that stock market every month. If you've got a lump sum to start with, great. If you don't, just start putting money into that market every single month. Get your investments going. For you guys that are in South Africa, I've actually left a link in there for Easy Equities. They're actually fantastic for that. And they help you with your investing and all that. So you can invest in any country in the world as well. I don't get paid for that. That's just, I think you get $50 or something like that if you join with them. I've just put it there for you guys because some people ask me, where can I invest, whatever the case. You can also invest directly on the JSE, but believe me, I had a direct JSE account in Joburg. And it's great, but oh man, it's not like this where you can just click sell and off she goes. You got to let them know that you want to sell your shares, and it takes them, and they'll give you the best price they can get, and it takes them like a day to sell your portfolio out or whatever the case. If you want to buy something as well, I mean, you see a price 104.08, and I'll buy that, and you end up paying 105 because that's all they could get. That's terrible. But another thing you can do is also open accounts with the banks. The banks often have brokerage accounts, and you can invest with them as well. Because the brokerage accounts are protected by the market, so you're pretty safe with that. Even if the bank disappears, your brokerage account should still be there with the, in this case, JSE, if you're in America, the Dow, the NASDAQ, and obviously the US 500, the S&P. I have to administer exams now, so I'll see you guys next Tuesday. Happy day to all. Cheers, Wendy. Have a good one. Enjoy the exams. Good luck. And may those people pass your exams. I hope they're not too difficult. I hope they are good. Yeah, I'm glad that it's going to help you because, look, it's, yeah, I mean, yeah, you lose out on that 25 years, but it's never too late. You can actually make quite a bit over 10 years and 20 years and so on. But I always tell, especially guys in their 20s, come on, guys, get with it. Just start investing now and just increase it over time, over the years. And you'll be so happy you did at the end of the day. Let me show you guys something really interesting here. which I'm just going to have to move this around a little bit again. Just give me a second here. It takes me a moment because my brain has to get around this little project thing here. Okay, here we go. Right, so now we're on the finance. I'm just going to take you to the investment calculator. Now, just look at this, okay? Just look at this for those guys that are young. Let's say you've got a starting amount of, what shall we do? Shall we say you've got a starting amount of 0? Let's say you got no money, okay? And let's say you got 30 years to invest. All right, the stock market will in general bring you 20%. It'll bring you more than that. But that's why the banks give you 10% and less, because they're making 20, 25%, 15% at the worst case. I'm going to use 20% because if you choose the right shares, with all the dividends and everything over the years, you should make 20%. And let's say you can afford to put $3,000 a month away instead of paying for things like expensive cars and houses and things like that. Okay, so if you were able to put $3,000 away every month for 30 years, look how much money you would have after 30 years putting $3,000 a month away. Now, you look at that and say, well, that's a lot of money. Well, for someone who's got that money, great. But let's say you started on $300 and in 30 years' time, you ended on $10,000 a month because of inflation, putting that money away. So, I mean, that's going to change over time. So that's an average over the 30 years that I'm putting there, right? $46,319,625, 30 years' time. And I'm pretty sure that in 30 years' time, that'll be a lot of money to you. Maybe that could be in your currency or rands or whatever the case. All I'm saying, guys, is, don't look at that figure and say, oh, that's too expensive. Now, you're going to start on maybe 1,000 or maybe 500. And you're going to work it up over the years. And eventually it's going to be probably double that or more over that 30 years if you keep on adding 10% every year to the payment or contribution. So if you average it out, you got $3,000 a month, $46 million. I'm pretty sure that's going to be a lot of money in 30 years' time still as well. It won't be peanuts, that's for sure. So, just for interest's sake, look at that. That is, if you've got the time to do it, you're going to be in a good place somewhere down the line. And, yeah. Imagine that, eh? Imagine that. So, yeah, I started investing many years ago, and it's held me in good stead. Most of my income comes from that, and it's a much better place to be in. So, this trading keeps you on the go with the markets, and it keeps you up to date with the markets. But if I have a losing month or a losing 6 months or a losing this or that, it doesn't bother me because I know the investments will always carry me. They grow and they grow and they grow, and you cannot believe how they grow and what they do. You put it in the bank, it's not the worst. I mean, you're going to get a good rate on a fixed deposit, but you're never going to get close to what you get if you just put it in shares at the end of the day. And it's easy to choose shares. I mean, you just look at the market and say, oh, Amazon looks like a good company, put it in there. And then if Amazon starts having some wobbles, you'll know about it. You can keep an eye on it, and you can just take that whole investment and put it into something else like Coke or whatever the case and see how that goes. So, yeah. And then things happen. For example, the brewery has got some bad news. And this is where you trade the news, by the way. So the brewery's got some bad news the other day with they have to put a sticker on their bottles and something to do with the effect that drinking causes cancer or something to that effect. Just like smoking, warning label, whatever the case. So all of the brewery companies took a big knock on their share price because this is now going to end the alcohol industry overnight, seemingly. That's how people react. And I saw that, and I thought, what's the first thing I do? I look at the biggest brewery in the world, Anheuser-Busch, and I say, I need to invest as much money as I possibly can in there while it's down. And there's already investments there, but now you add, now you add, now you add. It's cheaper, so you add. Okay? This is the only time in your life you get to dollar cost average. And because you know what? Just like cigarettes, people are not going to stop drinking. Just like people didn't stop smoking. They're going to keep on and keep on, keep on. And that share price is just going to go straight back to where it's supposed to be, because the company hasn't changed in any sense of the word. The company hasn't changed. All that's changed is the news around it that they have to now make a label that says don't drink. Okay, so yeah. Now, I've been rambling on about investing, but guys, it's so important. I have investments, but I don't have the knowledge to do it myself. I have the financial advisor who deals with it. You see, Kevin, once you have a financial advisor who deals with it, he takes his cut. It's a bit like going to the bank and having a fixed deposit. And he's going to turn around to you and say, hey, Kevin, here's your 14%. And you're going to be like, cool, man, that's quite good. That's quite good. I've got 14%. There you go. Good man, good man. At the end of the day, you would have got maybe 25%, 20% if you just bought 5 shares in the market and just kept adding to it every month on an equity account. So do yourself a favor and open an equity account. Now, this is not financial advice. It's just what I do. It's my opinion. Open an equity account that's not geared. It's just one-to-one. And just choose shares that make sense to you. Maybe choose shares. You live in the UK. Choose shares in the UK that make sense to you. Shops that you can see have got lots of improvement. They look like they're going to do well. And maybe Marks and Spencer, I don't know. And you can say, wow, this is great. I think I'll invest in that. And then choose 4 or 5 and then just put money in every month and just keep adding to it over time. And it'll outperform your financial advisor by far in the long run. It will. It'll outperform them. And at the end of the day, you're going to say to them, how can you only bring me 14%? Look at what I've done over 30 years. You know? Hi, Stephen. Welcome. Good to see you. Good to see you. Because, you know, that's always irked me is the banks offer you this. I mean, if a bank offers you 10%, you're like, over the moon. That's like huge. And then a financial advisor comes to you and says, I'll get you 14%. You're like, wow, that's huge. That's massive. That's great. And then you just invest in the stock market and you get an average of more than 20%. And you're like, whoa, you know? Yeah. Okay, at the moment, the markets are a bit high. But, you know, this is supermarket mentality. How can I call the markets expensive? I can't call the markets expensive now, can I? So, yeah, it looks like our US dollar Japanese yen trade is unhappy at the moment, but it's okay. It'll go back up. It's fine. Okay. So yeah, that's just a little bit about it. So today we've talked a lot about strategy, and we've also talked about investing. Very important. We also mentioned that the markets are still 50-50. I bet you I haven't told you that a win rate doesn't matter today, eh? But I should have. But yeah. So no more trades today, guys. I see you haven't picked any trades. Well, you did try, but I mean, there was nothing really that we could trade. What's the gold doing now? Still going down? Should still be going down because it looked like it was going down earlier. Yep, it's still going down. It's going to come down to here, and then maybe we can get a long trade out of there. That's quite good. Yeah, and like I asked you guys, what system were you guys using before you got to price action? What were you trading with? What kind of system were you trading with? What high probability system did you actually start out with? I know Kevin started out here, so Kevin's okay. He's good. Very few people start on price action, guys. Very few. And if you're lucky enough to start here, it's really great. And as I said earlier, I got lucky enough. Well, we didn't have computers, like I said, so I ended up starting here because that's all we had. We didn't have anything else. So we never got roped into all these fancy, marvelous indicators and systems and whatever else they have on the markets. You actually, Luigi, you can't be waiting for Trump to put some volatility in the market. He's already done that. Look at that. This, I can tell you now, as a result of Trump. Everyone's like quite impressed, I think. And look, it was, as I said, I don't know if you guys were here previously on my earlier live shows, but as I said before, that the last term that Trump was in charge, the financials did extremely well. In fact, the S&P, I just used to buy every time it came down. I just buy more, buy more, buy more, buy more. And then when they changed and the Biden administration took over, the markets were quite high and we were at the top, and it just came tumbling down. I tell you what, it just came tumbling down. So I don't know the politics in America and the differences and who supports what have you. All I know is that when he was in charge last time, this market ran. And I can see it's doing it again. The guys are really excited. So I don't know what he's doing right or wrong or whatever the case, but definitely having an effect on the markets again. And like I said last time, he also had quite a big effect on the markets, and it ran for a long time. I tell you what, the last term, it was like, just buy. Every time it came down, buy more, buy more, buy more, buy more. Maybe it'll do the same again. Interestingly enough, maybe it'll do the same again. I think tonight there will be more. Yeah, no, I see President Trump's speech here, so big speech coming later on. Anthony, I've tried everything. Anthony, do the investing thing, dude. I don't know how old you are, but if you've got 20 years before you retire, start putting the money into shares. Look, let me talk to you, Anthony. Bots. I'm not a big fan of bots, and let me tell you why. If a robot, I'm going to call it a robot, okay? Forgive me if the terminology is wrong, but I'm going to call it a robot. If an artificial intelligence, a robot, was good enough to give you so many wins in a market that you would make such a big profit. Because you must remember now, a robot can't feel, can't touch, can't think. The market's not objective. It's not mathematical. You'll be surprised how subjective the market is. The market is incredibly subjective. That's why you need a strategy. That's why we use a strategy to win in the markets. Now, nobody designs a bot around the strategy. They design a bot around the system. And as I've told you guys 100 times, the system doesn't make you money. The system gives you a high probability trade, which is 50-50. So out of 10 trades, you're going to win 5 and lose 5, which means if you make a bot on your system, it's going to be 50-50. No matter what you try, it might be 60 at one stage or 70 at another stage, and then suddenly it'll be 30. Yeah, it's going to move around. Eventually, it's going to average out at 50-50 because that's the market. That's how the market operates. That's why you need a strategy to win in the market. System's not going to make you the money. If a bot could do it, if a robot could make you win in the market, if a robot could give you 100% wins, 80% wins, then why aren't all the pros using it? Why isn't Morgan Stanley using it? Why aren't all the biggest traders in the world using bots? Good question, eh? And I can tell you now, it's because the system can't do it. The system can't make you the money. You can only make money with an approach, with a psychological approach. And that's what I'm trying to tell you guys and show you guys is it's got nothing to do with what you're seeing on the screen. It's got nothing to do with that system. Well, it has got a little bit to do with it because you use it to take the trades, but it's got to do with market approach. I mean, if you look at some of these pro trading desks and how they operate and how they're allowed to operate, there was one trading desk where if the guys took a trade, they were not allowed to sell it. They were literally not allowed to sell that trade, which means it's not a trade, it's an investment. The only time they were allowed to sell that trade was when the boss said you can sell it. That's how confident you had to be when you bought the trade. It's an approach. So a robot, and like I say, a robot, if I'm getting the terminology right, just can't make you the money. It can try, but it won't. And scalping as well. Scalping, same thing. It's insanity. Every scalper, Lincoln, that I've ever come across, you see, that's why 5-minute charts 99% lose. How many times have I said that? Scalping is a funny game because what happens with scalping, and it's a psychological thing again. Guy says I'm a scalper. So I take 10 trades scalping and I win them all because I'm scalping. I mean, I get into a trade, it goes into a win, I take it. Get into a trade, goes into a win, I take it. So I'm making $10, $20, $15 off every single trade. But I'm winning. I've got a win rate to die for. I've got a win rate, man. I can boast to anyone that I got a win rate of 7, 8 out of 10, okay? Because every single trade I take, I make 15 or $20. So I'm a genius because now I've got this scalping right. And then that trade goes into a loss. And so many times you take a trade, goes straight into a loss. But then that trade goes into a loss and it keeps going into a loss. And it looks something, let's go to the 5-minute chart like that, okay? It looks something like that. And what actually happens with the scalper when this happens? So the scalper takes the trade here because he thinks he's going to make the money, right? And then it does this. And it goes up, it goes down, it goes down. And he keeps thinking it's going to come back. And then what does he do? He dollar cost averages. He adds a bit more, comes down, comes down. Dollar cost average, add a bit more, comes down, comes down. And the stop loss that he had, he's moved away so many times. And he ends up losing $1,000. He ends up losing, I don't know, an absolute fortune. And over the 10 trades that he won scalping, he's made $100. So effectively, he's like more than $900 down based on scalping. So scalping just doesn't work because you win, and then all that hard work that you put together will be lost in one trade. That's how scalping works. And don't tell me that's not how it works because I know how the psychology works. I know how the people think because everyone thinks the same way. When you go into that loss, you don't want to get out because you don't want to destroy all that hard work you put together in the first 9 trades that you won. I mean, you just won 9 trades, and now you 1 trade's wiping them all out, and you're like, oh, I can't handle that. And then it just gets worse and worse and worse and worse, and sometimes it'll eventually even blow somebody's account. Because the mentality is, as long as you're still in the trade, you haven't lost it yet. Funny though, when you go into a win, and it comes back and you get a break even, then suddenly they say, I lost $700. How come the mentality on a win isn't, I haven't won anything yet? Because that's what it should be. If you're going to stay in a loss and say, well, I haven't lost anything yet, then surely on a win you should say, well, I haven't won anything yet. Same thing at the end of the day. You know, it's absolutely crazy. So Maduri, so what about Jim Simmons' strategy? So talk to us about Jim Simmons' strategy. Tell me about it. Tell me about Jim Simmons. Yeah, Maduri, tell me about Jim Simmons. That's exactly what happened to you. Tell me about it. Tell me all about it. I want to hear about it. You see, this is the thing. Scalping is, so many people out there at the moment are promoting dollar cost averaging. They're promoting scalping and showing you Lamborghinis and that. And I never talk anybody else down. You know this. I will not talk bad about anyone else. I'm not a believer in that. I believe that anyone who does that is scum. They should never do that. You know, everybody's got something to offer. If somebody puts themselves out there and they're offering you advice, whether it's good or bad, they're offering you their expertise, and they believe in their expertise, then who am I to disagree with it and tell them they're wrong or bring them down? They might have something good to say. But all I say is there's a lot of people out there that are promoting things like DCA and also scalping and stuff like that. And I just know from experience that it doesn't work on my side. It's never worked for me. And I've seen the psychology behind it, and I've seen what happens to friends and to people around me that do these things, and it doesn't work, guys. It doesn't work. Okay. And the basis of it all is the reason people do it is because they get taught that a system, like a price action system, for example, they get taught that that system is going to make them the money. They get taught that if you take a trade here and you wait for it to do that, then it's going to make you a profit. That's what they get taught. They don't get taught that what makes you the money is the business strategy, not the system. Because if you just follow the system, if you just follow the system alone, if you only follow a system, like a bot or a system or whatever the case, then effectively right now we'd be selling this trade because we'd be like, no, we need to get out of here because it's too... But if you're following a strategy, the strategy is we got in here, the stop loss is here, the take profits there, the strategy is let it run and sit on your hands. That's the strategy. If you follow the strategy, you might make some money. If you follow the system, then you might not make some money. So it's very difficult to get across that the market's 50-50, that you need to follow a strategy, and it's all about risk, 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 risk. All about risk. If you manage the risk and you make more on your wins, you'll make the profit. But everyone wants to trade a system. Okay. Exactly what I'm doing. Had a banger month and lost that and half the account in a day. And then that effectively, Maduri, that's what's going to happen. The 5 minute has a sell, buy, sell, buy. Yeah. But yeah, but you know, that's the trouble. And you can get caught up in it. You can get caught up in it, you know, and be careful of, and like I say, I don't say anything bad about anyone, but be careful of the guys with the 5 minute videos that only show you the wins. Okay, they'll make a video, show you know this scalp and that scalp, and I won that scalp and I won that scalp, and then they don't show you that big loss. Okay, that's also, you know, there are lots of losses in that. There's no way, and I'm sorry to say this, but there's no way that you can trade on a 5 minute chart, okay, and tell me that you're not going to take any losses, that you're just going to have wins every single trade you take. There's just no way, okay? It's impossible. Come on, it's impossible, right? You're going to have to be some kind of genius. And even the bots can't do that. Think about that. Even the bots can't do that. So, I mean, if the bots could do that, the biggest pros in the world would own the bots. They would use the bots, you know? So, Anthony, oh, I see what the 70 means now. You don't have time for investing. That is tricky. That is very tricky. But, okay. The only way to do it, Anthony, I just want to answer your question. What do I do? You know, it's a really difficult one. If you have a large lump sum, you could probably put it in a number of shares and take the dividend paying shares or something like that, and live off that. But it takes time to make money in the market, so obviously not the best idea as well. But for you, you know, even a property with an Airbnb on it would be tricky because you've got to maintain it, look after it and whatnot. And at our age, it's difficult. So, no, trading is probably your only avenue, but you're going to have to do it this way, slowly. And you're going to have to do it with the swing trading. If you don't want to do it on the 4 hour, try the day. Okay, try the day. The day is a little bit more relaxing and a little bit easier. With the same principles we're using on the 4 hour, take your levels from the week and take your trades over a period of days and just let them play out. Let them play out. Let the trades play out the way we expect them to. And you should if you make more on your wins and lose less on your losses, make a profit at the end of the day. It's the only way to do it. Don't try scalping, day trading, 5-minute trading. You're going to lose at every single one of those. Let me tell you, I've been trading for, like I said, 1,000,000 years, make that 30 years. And I don't like trading. Well, I don't not like it, but I don't do well trading 5-minute and 1-minute charts. Okay. And that's simply because the information is so unreliable. And even my psychology struggles with it. There are 1 or 2 guys in the world that can do that. And it's a special kind of psychology that goes with it. It's not straightforward. It's not simple. You know, it is difficult to do. Okay, according to what I've heard, Jim Simmons' strategy involves AI and more frequent trading than other conventional methods used by major funds. And that's exactly what I said, Maluri, just now. If a robot could win that many trades so well, if a robot could make your trading so profitable, then why aren't the pros turning to robots? Why aren't they using robots? You know, why are people still trading manually? Because you can just employ a robot to do your trading for you, right? No, not right. Because trading is not about a system. A bot needs a system. As I've told you, the system will not make you money because the market is made up of 100% traders. Traders, not bots, traders. Do you know who's behind the bot? Trader who wants to make money. Who's running the bot? Who's running the bot? The trader is running the bot. The trader's trying to make money from the bot. So now you've got 100, let's say you've got 100% bots in the market and they're all trading against each other and they're all clever. How's that going to work? Then everything will just be on zero, right? No, because bots are not infallible. Because bots can only trade with a system that you give it, and you tell it, listen, when the red candle gets to this point, you must buy, and when the green candle gets to that point, you must sell. So the bot's got all this information that you've given it, and you've programmed into the bot. Programmed by a human being, by the way. In it goes, and there it runs. And you think, well, I'm getting a 70% win rate here. And then suddenly you're getting a 20% win rate. You know why? Because the market's subjective. It changes. Everybody thinks the market's objective. Everybody thinks it's a mathematical thing. Everybody thinks that it's going to do this, that, and the other because of that. You know how we choose our high probability trades? We choose it based on what's happened before. So the reason we take a long trade here is because it happened here, because it happened here, because it happened here. So our brains tell us, because it's happened 1 or 2 times before, surely it should happen again. When it doesn't happen again, then we're a bit in shock, but we understand it because we're human beings. If it works the same way, then we're like, okay, then it's working. A bot doesn't understand that. A bot just knows every time it gets there, it must buy. Every time it gets there, it buys. Every time it gets there, it must buy. That's all it understands. It doesn't understand the subjectivity of a market and what's happening in the market. It also doesn't know that President Trump's speaking tonight. And it doesn't know what he's going to say. And it doesn't know what's going to happen when the market shoots up and it shoots down and it shoots up and it shoots down. It doesn't know what's going to happen. It doesn't know what's going to happen with the initial jobless claims or anything to that effect. It's just a bot who's just buying and selling on a mathematical base in a market that is insanely subjective because it's 50-50. Interesting question. Danny says, hi Rob, do you prefer C-Trader to MT5? Do you know, Danny, it's actually the first time that I'm using C-Trader. Well, I mean, this week. When did we open this account, guys? A week or 2 ago? I don't know when I opened this account for you guys with this Funded Trader Markets, and we're trading it together, right? So I took this on, and I'll be honest with you, Danny. It's a bloomin' nice program. I like it. I really do like it. You see, the trouble with MT5, I have to say, is it's insanely complicated for a beginner. I mean, when I first started using it, I really, it took me a while to work my way around it, you know? And then effectively, I got to the point where I had it all worked out. The thing is, I don't need all the fancy things. And once you work out MT5, it's okay. But then when you discover things like TradingView, that's so much better than MT5, you're like, wow, you know, okay. So I must say I'm very, very, very impressed with this C Trader. I actually like it. I think it's a marvelous little platform. I think it's great. Obviously, the Fund Trader Markets gives it out. Now, the last account that we had was the Match Trader, which was with TradingView, and we still got it. But I prefer this one to that. I must say, I do like this one in comparison, and we're trading nicely together on this one and what have you. So, yeah, I'm totally happy with this. Like I say, the MT5. You see, another thing the MT5 doesn't have, and that really it irks me. It's been around for so long, MT4, MT5, and it just drives me nuts that when I want to buy something and I want to work out my stop loss or whatever the case, you know, I can do it with this program. I can work it out here. I can do my whole thing on a C Trader. You know, you can't do that on MT5. You can't do it. You need to get an extra program in out of their system to work out your lot sizes and whatnot. So MT5 is a hell of a lot more intricate, more complicated. It's probably got a lot more to it. Nice thing about MT5, you can incorporate a lot of different brokers to it, but by the same token, I wouldn't say I prefer C Trader. I'm using C Trader because this is the account that we're using. And when I took this one, I said to the guys, I want to try the C Trader out, and that's why I've got this. But yeah, I'm very happy. I like it. I really like it. I really, really like it. I see, Danny, you're also enjoying it. Yeah. Now I gotta say, it's actually a super program. I gotta say, I'm actually surprised. I thought it would be very, very basic, and it's not. It's got everything that you need, and it's quite decent. I probably still haven't learned everything about it. There's probably still a lot to do. But then MT5 as well. I've been using it for years and years and years and years, and I still miss out on things there. So it's not like I'm a genius on MT5 either. All I need is the chart to work, the lines to be able to draw, and to be able to draw the support and resistance and trend lines and that sort of thing. That's all I need. And I don't even need the indicators much or anything. So there's not a lot that I need from the chart. But one of the things that I need that MT5 doesn't have is this ability to work out your stop loss and that sort of thing. It's much more complicated on the MT5. Yeah, you know, the other funded account, Match Trader, on this Funded Trader Markets is TradingView. They have a TradingView account, which is great. And trading on TradingView is actually also much easier than MT5. So yeah, you know, Danny, I understand when you say I can't get on with MT5. I understand it. I must say, when I first started using it years ago, I was lost, man. I was like, where's this? Where's that? How do I find this? It doesn't take long to figure it out, but once you figure it out, you know where it is. But there's a lot of things there that you just think it should have that it doesn't, and I don't know why it doesn't have it. It should be a much, much better program than it is. That's what I'm trying to say. It should be a much, much more advanced program than it is. But yeah, we deal with it. I don't know how you guys feel about it, but yeah, no, I trade with MT5 because I got to trade with it. I mean, the broker gives me MT5. That's what I trade with. I'm not going to use anything else because of that. But I actually prefer doing my research on other programs. be perfectly honest. And then I just go on there and I just trade. Take the trade. They don't have much in the way of that. But the research is all there. But if you want to get specific research and whatnot, you have to go into the, I can't even remember what it's called now, the goodie where you get apps and that sort of stuff. And you got to like buy programs that make things work better and all the rest of it. So it gets a bit complicated. Luigi, wonderful stuff. It's been good having you here. Don't forget, the name's Rob. Tom's the other guy. Yeah, gotta love Tom. Okay. Have you ever used MT4 is the same as MT5. I actually found it very odd, Anthony, that MT4 was superseded by MT5, and MT5 was never that much better. In fact, in many cases, MT4 was actually better than the MT5. And what I found surprising was they never really took the MT4 away and made it all MT5. They still use MT4 and MT5. It's weird, but yeah, I get you, Anthony. And MT4 is pretty much the same as MT5, except for you get some colors on the prices and stuff like that on MT4, which you don't get on MT5. It's all just gray, But yeah, you can put all your charts up and you can do your thing and you can have 2, 3, 4 screens and you can move your stuff around and whatnot, and it works brilliantly and all that. But yeah, like I say, there's a few things on there that I would like to have seen them do. I would really like to have seen them do something different, which they haven't done. And then you got programs like this coming up, the C-Trader, this is a smashing little program. And if you want to put all the charts up, look at that, just the same as MT. And, or if you want to put free chart mode, it's there. You can have them in different sections here. It's also great. You can take this out of your way and you can have a much bigger page. You can go full screen if you want to. So, it's all here for you. It's all great. And now I'm very, very impressed. Very, very impressed with this C-Trader program that comes with the funded markets. So, yeah. I'm actually quite impressed with, a lot of people were going on. I actually even did videos about prop firms and funded markets and things and talked about how, there was such a big thing going around about prop firms being a scam and all the rest of it. But I have to say it's great, especially for people that don't have the money to get into the markets. And, you can buy a program for $90, $25,000, and there you go. You've got an account. You've got a challenge account, and then you pass that, and then you can start making money, and they'll share the profit with you. And you only stand to lose $100. Whereas if you put $5,000 in an account and you mess it up, you lose $5,000. If you get a $25,000 account here and you lose $2,500, you lose $100. So I'm actually quite impressed with that, and I think they're actually doing a good thing for traders and getting traders into the market, and it gives you a damn good education as well. For those guys who haven't traded before and they're learning to trade and they're getting into the trading and that sort of thing, and it's an effect of trading with real money or something real, and you're growing with it, and you want to do well with it, and it's not a demo account. Effectively, it's a real account. So yeah, it's really good for people, getting into the market, and you don't stand to lose an absolute fortune. So I've been sort of won over with that. I must say I've been won over with that, because in the beginning I was totally against all the prop firms and funded markets, and I used to think, nah, these guys are just a bunch of scammers and whatnot. What are they up to? But now I realize it's actually doing a lot of good. Actually doing a lot of good for people, and giving people a chance. And even now, with this training, I mean, it was Wendy who said to me, hey, Rob, let's open a $10,000 account, and, we can trade that and do it together and what have you. And I thought, but if I mess it up, that's $10,000, And then I thought, hang on, for $100, I can have a $25,000 funded trader account. And if we mess it up, it's going to cost me $100. Big deal. So, yeah. And also, if you guys want to join and have the same account, basically the link's down there. You can go and get your own for $100 and have the same account. So it's marvelous. It's absolutely, they've won me over. I've got to say, they won me over. But I must say, a lot of the firms out there were very strict, you know, closing people's accounts down because they had 2 trades on 2 different accounts, and or you know, like you weren't allowed to trade over the weekend. You're not allowed to trade the news items and all this stuff. Whereas these guys allow you the freedom to trade your own way. They allow you to trade the news, all that sort of thing. So that's what I was looking for. I got to say, I was looking for that freedom as well. And you know, the platforms they offer are decent. So yeah, for those guys who are interested, go for it. I trade a small account. Soon I will up it when I retire soon. Yeah, it's better to start small, Danny. You know, or trade small, get a good feel for it, and then get around it. Because the big thing when you start out, even if you're losing $1, it makes you start sweating because it's real money. And if you can get over that and you get around that, then you start learning to deal with bigger amounts of money, and then you become more comfortable with it. Because if you can't sleep at night, you can't trade. Listening to the comments with interest, I was drawn into Smart Charts, a good platform but expensive. I wish I'd discovered Rob's channel sooner. Yeah, Roy, you know, there's lots of stuff out there that you really don't have to pay for. For example, you know, if you take on a cash broker account or even a funded trader account, if you've got cash and you put it in a broker account, they give you your platform for free. No questions asked. But you're putting money in their account and they're going to make money from you, obviously. The funded trader account, same thing. You're paying $100 for the account, so they give you a platform to trade on. Obviously, they've made some money out of you. It's fine, but you don't have to pay for a platform. You're trading. So, yeah, that's great. Yeah, Henry, I get, you know, that you get different ones and you get ones that have been going for a long time and all that. It's up to the individual at the end of the day, what they choose, which way they choose to go. What I would say is once you've learned to trade properly, once you've got a good feel for it, if you've got the money, then trade with real money and cash in a real account or a cash account. Don't stick with funded accounts forever. You know, it's great to have a funded account. It's great to have fun with it. But like I say, in the long run, what you want is control of your own money. Okay. Doesn't matter which one you use. I don't know what the rules are like on the other one, Henry. Everyone's got different rules, and that's where the complication comes in. And I got to say that what I liked about these guys is the rules were more relaxed. Danny, yeah, gradually increase the account. Yeah, it's the best way. Just increase the account over time and get to a better place. Okay, so don't forget to come back and watch the stocks versus property video tomorrow for the investments, because we did talk about the investments and the investing and the way we're going to go with the investment and that sort of thing. Don't forget the market's 50-50. Strategy, risk, risk, risk. And a win rate doesn't matter. Guys, I'm going to be on my way now. It's time for me to move on. Time for me to go and relax a bit. And like Bud says, you don't have to pay for a platform. And that's the interesting point that I make. You know, if you buy into an account, if you start opening an account with any broker, they'll give you the platform. And or even if you take a funded trader account, they'll give you the platform. You don't have to buy a platform. You don't have to pay for a platform. Not necessary. There are some, was it ShareNet or something like that as well, where you can pay for platforms and stuff. I've never paid for a charting package in my life. And it's not necessary ever. Okay, so I'm going to be on my way. I'm going to head off now. I want to thank you guys for being with me and watching, and we'll have the live show again next week on Tuesday. Tuesday, I've moved it to 10 o'clock GMT plus 2, by the way, on Tuesday, and then the Thursday stays at 2:30 GMT plus 2. The reason I moved it till 10, and I know a few of you guys come in or later in the evening and that, but a lot of the guys, it was too early for them in the morning. So I'm trying to cover both ends of the scale here. I'm getting a feel for that. Hopefully these trades don't get wiped out by Donald Trump's speech. We'll see what happens later. And then we'll take some new trades as we go. If you have any trades that you want to mention them in the comments. And guys, don't forget, we don't only have the live videos, we've got the normal videos that come out on a Monday, Wednesday, and Friday as well, which are very educational for you guys. I bring them out specifically to give you guys information and to help you with the education. Don't forget to watch the end of those videos, because that's when I always reiterate the strategy. And whatever the video is about, I always try and reiterate the strategy at the end of the videos if I can. So guys, I'm going to be off. So I'm going to say thanks for watching. And then we'll be back in the near future, probably Tuesday. And don't forget to watch